Hey guys, Max here. Why are houses right now going for so much money and selling literally within hours of being put on the market? Well, there's a variety of factors. Let's go over one that you probably haven't heard of, and if you have, let's dig a little deeper on what's happening here. How corporations are buying up houses, robbing families of the American dream. This was written almost a year ago in July of 2020, but it's still ringing true, and it's definitely happening right now today. Long story short, there are these huge corporations. And quick little story, in 2012, this developer went to go bid on a house that was foreclosed on, and they thought that 85 grand was a good deal. Then he said, okay, the bidding's going a little higher, go to 87 grand. It actually ended up going for $100,000. So a lot more than what a real estate developer thought it was going to go for. Interesting. So he figured out who is this bidder coming out, this out-of-town bidder coming. Invitation Homes, it turned out, was owned by Blackstone Group, the world's largest real estate investor. Created after a company called Treehouse Group was folded into Blackstone, then renamed in 2012. Invitation Homes was on a $10 billion spending spree. It's purchasing $150 million worth of houses per week. That is absolutely crazy. Anyway, it goes on to say that these huge corporations, specifically BlackRock, was literally going to these auctions and buying every single house on the block for about $1 more than everybody else. They just wanted to outbid the person just by a little bit. They're buying homes for any amount less than it would cost to build one, because building a home, especially right now with the lumber prices and how insane the world is inflation-wise, they figured out throughout time, and now we're in 2020. 2020 still doing the same thing. Just saying, the house flipper had a handful of cashier's checks, and the new guys had a duffel bags full. Anyway, this book called Underwater describes, the 2008 financial crisis and what's been happening with the real estate market. Between 2006 and 2016, the homeownership rate fell to its lowest number in 50 years. The number of renters grew by about 25%, a quarter. And these guys right here, these guys love when the market goes down because they can use their millions and billions to start buying up every single actual hard asset that actually has value, intrinsic value throughout time. The dollar bill is a fiat currency. It is losing its value by the day. That's why you need to invest into hard currencies. That's why I'm doing hard assets, hard things that actually are worth even when the economy is really, really dire. Warren Buffett and B.W. Hughes buying up an insane amount of single-family homes. He notes that the companies own around 300,000 U.S. homes so far, but that's just the tip of the iceberg. And this is written almost a year ago. They've bought quite a few since then, as they're wealthy enough to buy and tech-savvy enough to manage multiples more with ruthless efficiency. Home price appreciation has historically been how Americans achieve financial prosperity. Unlike stocks and bonds, ownership of which is concentrated at the top, houses are widely held. Roughly half of housing wealth is owned by Americans' middle class. And that's how most normal middle class people make it. They buy a house when they're young. Throughout time, they pay down the mortgage, and the equity in the house goes up and up and higher. They die at some point, give the house to the child. That creates generational wealth. Once you take that away, and the nation, especially millennials, my generation, becomes a nation of renters, that goes all away. So that one vehicle that really creates wealth throughout generations has been taken away, and thanks to billionaires. And I'm not by any means being angry at the billionaires. I'm just simply saying that's why the houses are going for so much and so fast right now, because they are cashing in. Because the reality is this. If I told you you can borrow as much money as you want, you'd think, all right, that sounds like a good deal, but at what interest rate? These huge companies can borrow at an interest rate so low. Let's say inflation is 5%, which it is right now, 5% inflation, and they can borrow at 2%. 3% is actually going in their pocket in return, because the reality is if you were to pay cash today, you'd rather finance it, because the interest rate and the inflation actually makes it so you're actually putting money in your pocket by financing. This is why when interest rates are really low, it's actually not always a good thing. It's actually much better when interest rates are higher, because people are incentivized to put the money in the bank. Anyway, back to the article. Obviously, they talk about, they're looking for the ideal buyer. This is so interesting. They're targeting an aspirational living experience tenants who were typically about 38 years old and married with a child or two, annual income about $88,000, less than stellar credit score, around 665, which is really hard to buy a home with that, and about 45 grand in debt. If they wanted to live the middle class lifestyle to which they were accustomed, they'd have to rent. So they're definitely targeting a person like this family right here. Obviously, it's just a stock image, but this image right here, where they're just trying to make ends meet. They have 2 kids. Husband and wife both work, but it doesn't always work out as good as one would think. Since 2010, 700 houses in Spring Hill, Tennessee, have been purchased by just 4 companies, including American Homes for Rent, Progress Residential, December. Yes, that's the other. Together, the 4 owned about 5% of the houses in the town. Think about that. 5% of the total houses in the whole entire town is owned by 4 companies. How is that not oligopoly? Almost a monopoly, obviously. But when you get to this place and you only have 4 companies controlling all the rental supply, you know what happens, right? Well, prices go skyrocketing. As a result, rent skyrocketed. When December visited with the town's vice mayor, Bruce Hull, in 2017, he was told that, quote, "It hasn't been that long since you could get a 3-bedroom, 2-bath for $1,000 a month. These houses were now closer to $1,800 a month." Wow, that's almost a 2-fold increase. That's a huge increase. Most people cannot sustain that over a small period of time. If homeownership falls out of fashion for even a generation, there could be dire economic consequences, unless renters become diligent savers and prudent investors. Right, yeah, right. If that had happened on a grand scale, it would be a momentous shift in American behavior as abandoning homeownership in mass. I don't know if it's so much abandoning homeownership. I think it's being priced out of the market. I mean, I see some of these houses. They're priced for $200,000. They sell for $20,000 or $30,000 more than the asking price, and usually within a week. That literally is mind-blowing. My mother's a real estate agent in California. She's saying she has to, when she has buyers, has to offer 10, sometimes 15% higher above the asking price just to even get a phone call back, even to get a response back. Now that is crazy, absolutely crazy. That's why they're selling so much so fast. The interest rate principle is this. If you could borrow money at a very, very low interest rate, the question is, how much will you lend me? These huge corporations, especially because they see, as B of A stated, just this last month or so, they're expected to see transitory hyperinflation. Now, what does that mean exactly? Hyperinflation means 50% inflation in a matter of a 30-day, 1-month period. Well, that may or may not happen. Obviously, they're forecasting that. But imagine if that does happen. That means rents can go up a huge portion in just one lease period. You could be paying $1,000 one lease. The next lease, they could say, okay, we're ready for $1,500, and then $1,800, and then $2,000. It's crazy how much inflation really does affect every single person. So that's why home prices are going high, sky high. But the reality is this. As we all know, bubbles can only go so big before they burst. And that's when prudent people who actually are ready to go and have the cash in hand, I call it the sword. If you have the sword in hand ready to fight when the market goes down, you're in a good position. But the reality is not everybody has that. So what you can do, even to hedge the hyperinflation, is to buy hard assets. And I say hard assets: gold, silver, Bitcoin, real estate, things that actually you can hold, they're tangible. Obviously, Bitcoin is not that, but it's decentralized. But who knows? Maybe the U.S. government started that. We don't know at this point. Back to the point, though. Houses are going for so much and selling so quickly right now. It's really hard for the middle-class person to get in. And maybe there's some sinister great reset momentum behind it. Maybe the great reset really wants all these billionaires and all these huge companies. I mean, think about that. 4 companies own 5% of the homes. Imagine if that goes to 10% or 15%. The money is so concentrated in these small number of hands. It's really interesting how we're going to see that. But I think inflation is going to keep on going higher and higher 2021 and probably into 2022. Once this free money, all these benefits expire, which I think they're going to continue to extend them, but we'll see about that. It's going to be interesting to see how the economy actually reboots, actually rebounds after this huge, potentially really big recession we're about to go through. Anyway, houses are crazy right now. The real estate market is absolutely crazy. What do you guys think? Is real estate worth the investment right now, even when the prices seem to be sky high? Comment now. I want to hear what you guys think. I will catch you guys in the next one. I hope you guys enjoyed. Make sure to like, subscribe, and bye-bye.